All right. What's up, everyone? How is everyone doing? What's up, Wally? What's up, Redeemed and Restored? Justin, Said, how long has everyone been in the markets? I've been in the markets for 3 years almost now. Thompson, what's up? What's up, Phil? What's up, Kim? Great to see you back. Noel, Jay, Alex. Hey, love to hear that, Jay. Love to hear it. You use a very big SL. Oh, do I? It's not really relevant though, is it? Is it? Steven, what's up? What's up? What's up? Does the masterclass have more educational content than the basic mentorship? Yes, in some ways it does, and you have more support and more tools. So yeah. What's up, Sport Lotto? Great to see you. What's up, Sergi? What's up? What's up? Year and a quarter for me. Oh, nice, nice, nice. Good stuff. Good stuff, everyone. So, as you may have seen in the title as well, today I wanted to talk about how fair value gaps create a narrative. Let me first touch on a few things. I absolutely love to see the familiar faces right here. What's up, Gerard? What's up? What's up? What's up? I love to see the familiar faces right here. I think we are truly creating something beautiful right here, and not just me. It is everyone that is involved in here. And we are creating some sort of family, I think. And I don't want to get emotional or a rant right here, but the main purpose behind why I'm doing this stuff is because I think we need more clarity in the trading community on how to actually get to profitability. And what I called out in the Telegram as well is that I like to call them SOS traders or SOS traders, however you want to call it. SOS traders, shiny object syndrome traders, and they don't stick to one thing, and they continuously look for the next best thing. And this is the biggest downfall of all traders. Of course, this is also psychology, right? So it all comes back to psychology. Good morning, Akash. How are you doing, brother? Low quality video. Try to see if you can change the settings on it. Try to see if that helps. Appreciate you, Sport Lotto. Well, my first year. Bro, we have all been here, I think. We've all been here as traders. And the thing I want you to do, so I'll give you some homework as well at the end. So this is like how I sort of do it inside the mentorship as well. On Sunday, we have videos. Of course, in the mentorship, we have a video every day. But in the mentorship, I give homework for the upcoming week to all the members. And I'm going to do the same right here. So I'll give you all some homework to do. And the next week, we'll touch on the homework again. And maybe I'll give some new homework, etc. So hopefully that helps. I just discovered your channel through your last video, and I love simply. Hey, love, welcome, SK. Love to have you here. Welcome. Appreciate you being here. Thank you. Do you take live trades? Yes, I do. All right. So SOS traders, again, try to see how many SOS traders you can spot. If you want a full explanation on them, then check out the Telegram in the link in the description. But SOS traders, we have all been there, constantly searching for the next best thing. And that's how we got to SMC in the first place, I think, right? Because we wanted that holy grail, but we need to get out of that cycle to actually achieve something. All right, so fair value gaps. Fair value gaps is very interesting because fair value gaps on their own create a whole narrative. So Tuesday, we have an A to Z guide video on the fair value gaps. Of course, going over the basics, but as well, A to Z guide is also for advanced traders. Don't forget. So how do fair value gaps create a narrative? You may notice that sometimes, and we touched on it in the, I like to call it the first line of defense video. It is the breakaway gap video that I made. And you'll sometimes notice that a lot of the times fair value gaps either get traded back into and then instantly price continues, or fair value gaps get traded all the way back into a very deep retracement and then it reverses a lot of times, right? So what then happens is these fair value gaps, they actually create a story. They create a whole narrative. So your whole bias could be created just off of fair value gaps. That's pretty crazy. So if we, and again, we need everything to be in context of one another. So if we take a look at the monthly right here, let me just click this away. I'll do a little forecast at the end, not too in depth like last week, but again this week as well. Tuesday, Wednesday, Thursday. Tuesday, Wednesday, Thursday. It is pretty much the same. Same thing this week. Keep in mind, Wednesday we have FOMC at 2 p.m. FOMC at 2 p.m. So ahead of those days, you might want to trade a different pair than a dollar pair. But again, that's up to you. All right. So right here, we are coming into a monthly fair value gap, right? Then on the daily, if we drop down into the daily, how do we deliver into that monthly fair value gap? What you will notice is, first off, we have a little sting. So once we have not reached that draw on liquidity just yet, we will have a little sting into fair value gap and then a continuation away. That is when I like to trade those fair value gaps. When you just have a fair value gap on its own, it tends to get respected when we are close to the draw on liquidity. And then we have a little, and momentum is still high, right? So we have a little fair value gap and we boom, sting in it. And then we hit or we trade to the draw on liquidity. That's what you'll see happen a lot of the times. Now, as well, we have a fair value gap right here. It got completely disrespected right here, right? Now, what you'll see, again, what is the new draw on liquidity? Well, on the monthly, we had this monthly volume imbalance right here, right? What you will see is if we trade to that draw on liquidity, then again, we have a new fair value gap right here. Momentum is high. Same thing. We sting into it and we move away. Again, volume imbalance. I sometimes like to see volume imbalance as fair value gaps, but I prefer fair value gaps on their own. Now, what you'll see here, again, we trade into this fair value gap, respect it, no body close below, and then we move away again. Now, once we reach the draw on liquidity, can you see on both sides right here how we have a deep retracement into a fair value gap every time? And it already starts with this candle, right? Because this candle closes, then we have an established fair value gap right here. And this candle is closing inside the fair value gap. Now, if we take a look back at this fair value gap and this fair value gap, did we have a close inside the fair value gap? No. So it already, the first sign is already right here. And what does it also create? It creates a swing high. Do you remember or recall the video that I made on intermediate term highs and intermediate term lows? This is the beginning, the very early stages of an intermediate term high. Why? Swing high, lower swing high to the left, lower swing high to the right. So again, that is a very early indication. And then once we have a fair value gap created here, this right here, once we close all the way back down here, then again, that fair value gap is disrespected. We can already anticipate that low going. What is this? Okay, no, this will not work for me. Thanks for all the effort. It's not your style, but the leak of the inside. All right, no worries. You can just leave if you want to. Have you ever had such a state that you were too lazy to sit down at the chart and trade? If yes, how did you deal with it? How long have NDoc and used time? Have you ever been lazy? Yeah, that is difficult. And that starts all with the foundation, right? It all starts at the foundation. So what you'll see, is it all starts at the foundation, right? We need to first have discipline in other areas of life. So usually when I'm lazy to look at the chart, so I don't have that urge to look at a chart, I'm usually lazy in other aspects as well. So I'm usually lazy in my fitness, in my diet, etc. So start at that foundation first. All right, so if we continue right here, we already have that fair value gap disrespected. So then we know, all right, we might want to continue lower. And here again, right, we only have a little sting into it, overlapping, of course, with the breaker, and then we continue lower. So what I want you to do this upcoming week is I want you to fully study fair value gaps, how we use fair value gaps as our narrative, and how we deliver to a drawn liquidity. Because if we still have a clear drawn liquidity, we can expect a sting into fair value gap and then a continuation. But if we have reached the drawn liquidity, and even here, we don't even have reached a drawn liquidity, or we are not certain of a drawn liquidity to the left, right? But there is such a heavy, sharp turn, as I like to call it, an ST. That's what I teach in the mentorship, an ST, but I taught it in market maker model video as well, a little bit. Then right here, we have that fair value gap. It immediately retraces very deep into the fair value gap. And that's not a characteristic of that price wants to continue higher. So here you have a swing failure again, and this repeats and repeats and repeats again. For me, for me it makes sense, but you need to do the studying on your own. So if you want to study this, then go over this week and just study the fair value gaps. Again, doesn't have to be on the daily, can also be on the 1 hour, 4 hour, whatever you prefer, right? You can do a lot of work with it. So right here, this is also how I got to this drawn liquidity, right? We have the weekly fair value gap that we traded into, that we expected last week. Then on the daily, right here, on the daily, we had this fair value gap created. This daily fair value gap created. So I did not expect a trade into this fair value gap. That doesn't make sense. Because we only need a little sting. We already have the momentum to trade into the weekly fair value gap and then a continuation. That is the whole logic behind it. We have the momentum, and that's again the same thing, right? That's the first line of defense. So there's something overlapping. So that's already the high fair value gap is the one we are likely going to respect. And this fair value gap is likely not going to get traded into. And that's the video on breakaway gap. So if you're interested in that, then take a look. How long have NDOC, NWOC, and RTH been used? I have no idea, but I don't use NDOC, NWOC, etc. Will price enter the first FVG at the 104.200 level and then enter lower? Let me take a look for you, my friend. This one right here. This one, I'm not sure actually, because currently we are either, if we do want to continue, we have a volume imbalance right here, but we are coming into a weekly fair value gap. So we have a little bit of both sides. Hey, what's up, Fabian? How are you doing, brother? How are you doing? Great to see you here. Love this. This is how it's right. Hey, nice, nice, nice. Never seen this, well, Michael, about closing inside of a fair value gap. Yes, closing before. Yeah. It's something, again, you need to study it, right? It's something, it's an interesting topic. But same again here, right? We had this weekly fair value gap and we already closed inside here. Of course, that's a very, very early sign. So this is not something set in stone, but it is a very early sign that we might not even respect this fair value gap. So then study how we close inside of it or wick away from it, and then how those fair value gaps create a story and a narrative. That's a very fun thing to do. So right here, we are not closing inside of it just yet. So if we do want to continue higher, we could see some retracement on the dollar right here. Something along the lines of this. Again, I'm not trading tomorrow. My main focus again will be on Tuesday, Wednesday, and Thursday. So that's where my main focus will be. And Monday, we could see the same thing as last week, right? So we could see some sort of consolidation hovering above a discount array, and then a sting into it, and then a continuation. Same thing that we talked about on last Sunday. Really excited for this month's message. Hey, love to have you on the team, brother. Love to see it. Love to see it. Let me see if I missed something. That sting / wick into is a great point. Thanks. Yeah, it's. Thank you, Alistair. It is what a lot of people tend to forget, right? And that's what is important. A lot of people see my stuff and they think, this is for beginners. No, that's not true. It's the furthest from the truth. It is the basics that make someone master something. That's all it is. When you ask Jeff Bezos or something, or Elon Musk, how do they get rich? It's mastering the basic. It's doing the ordinary stuff for extraordinary amount of time. Like the quote I dropped in the Telegram. And that's just all it is. Great concept, man. Keep up. Hey, Dave. Love, brother. Love, love, love. Is there a difference between a busy/SIBI and an imbalance? No, a busy is a bullish fair value gap and a SIBI is a bearish fair value gap. And imbalance is the same as a fair value gap. So it's all the same stuff, just different fancy words, essentially. Really excited for this. Oh, yeah. Read that. Looks like I have my Sunday booked off just to go over price. Yeah, you got something to do now. You got something to do. Perfect. Brother, can you analyze the 4 hour and 1 hour? Sure, on the dollar. So this is interesting, right? This is also something we need to... Yeah, it's recorded. Don't worry. If quality is bad right now, then just rewatch it. No worries. Is it ICT? Yes, everything is ICT. Glad hopped on YouTube. Hey, glad to see you here. Glad to see you here. Mastering your videos requires work. For sure. You're completely right, Gordon. For sure. So this is interesting, right? Because we have a 4 hour order block right here. But we also have a daily order block right here. And that is interesting because a lot of people will see this 4 hour fair value gap or 4 hour order block. And let me show you an example actually. Where was it? Let me find it. Let me find it. Yeah, right here. This is the same thing, right? We have a 4 hour order block right here, but what is right above it? A daily order block and a daily fair value gap. So what is stronger? Ask yourself, what is stronger? The daily or the 4 hour? The daily. So where will price likely trade to? What has the stronger magnet? The stronger magnet is on the daily. So the daily will likely trade into the daily order block and daily fair value gap. And that 4 hour order block will likely get disrespected. So that's when you'll see a sweep of this order block into a higher time frame order block that's just above it. And the same thing could happen on the dollar right here. So if we take a look right here, daily order block right here, 4 hour order block. If we have enough volatility, we could see something like this. Same thing could happen, right? Yeah, the high time frame is more significant. Yeah, exactly. Hey, love to see it, Marcus. Thank you. Thank you, brother. Thank you. High time frame key level, low time frame key level. What is this? Key level is just your PD arrays. So your point of interest, all same stuff, right? So that's your discount and premium arrays. Buy side demand, sell side demand. Yes, sir. Yes. Entering a trade on an FEG. When do you use the CE and when do you enter right away? It depends, right? I usually enter straight away and I don't wait. I don't really use CE, to be honest. And I usually, but again, that's something personal for me. I don't really use CE because I like to keep it as simple as possible. And I would only wait for CE if I have my stop loss and it is, for example, if I enter right here on this fair value gap and my stop loss would be here all the way here, and my target would be here, then CE might give a few better RR, if that makes sense. So then I would wait for CE, but that's only a little bit refining, etc. What's up, Shelton? How you doing? With this self-trading, how much trades do we average a week? Being that it provides a high winner, we should require less trade, right? Yeah, but it's fractal. So I don't trade the 1 minute, but if you were to trade the 1 minute, you would have more trades. This past week we had, or at least I had a great week. I had 1 trade on AU. I had 2 trades on EU and 1 trade on GU. So what is that? That is 4 trades. Yeah, 4 trades this week. And all winners, so that's nice. It's nice to see. I had 1 trade on Thursday as well, so that was nice. It was a nice little Thursday continuation before we had this, thank God it's Friday, return into the weekly range. The high time frame, yeah, for sure. Currently, I've studied ICT concepts for close on 4 months now. What times do you personally trade around? Thanks for so much. Hey, no worries. Thank you for being here. 4 months. You're on a great path already. What times do you personally trade? I trade London the most. I tend to avoid New York unless it's really high probability conditions. But I always advise people focus on one session. And what I always notice from my own experience, if I focus on 2 sessions for the day, then New York, I'm absolutely fried and I just can't think straight. I like to hop out of my bed, do my routine, my bathroom routine, etc. And then just full focus. And then the rest of the day, you go do something else. And that way you are also not stuck on and glued to the chart in a sense. So focus on one session. I personally trade London session. So when you see competing or opposing PD array, use high time frame PD array. Yes, exactly, perfectly said. Always the high time frame. Okay, so I wasn't wrong. Yeah, you're not wrong, Fabian. Come on, you're never wrong. SMS can be perceived as equilibrium. SMS. What is? If you can remind me what SMS is. It's not the, you're not talking about the text thing, right? Is FVG different in 1 minute, aka Silver Blue, than the high time frame FVG? It is all fractal, so basically it is the same thing, but a 1 minute FVG will have way less significance than a higher time frame FVG. If that makes sense. My DXY chart looks different than yours. Could be because you maybe have, or maybe I'm using a different broker. So this is TVC, I believe. Yeah, TVC is the one I use. You could be using Capital.com or ICUS is the futures contract, I believe. DXY reach daily fair value gap overlapping with mitigation block over the weekly. Yeah, exactly. So it's a bit iffy, right? We have to be careful right here. And we can't just simply, like here, we could just buy. And that's basically it, right? We could just buy, and we will be correct. But here it's a bit iffy. And if you also notice, we are at equilibrium of the range currently. So be careful is what I would say. Be careful until we get a clear sign of what price wants to do. Are you scared of the algorithm changing how it works? I definitely am, because ICT has more than 600k subscribers and there are so many profitable. Do you know? Yeah, I know what you mean. I've been through that stage as well, where I was worrying. But if you think about it, right, and that's always the way I like to think about it. There are only so many people profitable that truly make money off of this. And they are usually, the people that make money off of it, they are usually very small fish. So they are not even that big of people. So they will likely not target us. And the thing is, most people don't succeed because their psychology is absolutely messed up. So your exit liquidity is not someone that you are outcompeting on a technical level. It is usually someone that you are outcompeting on a psychological level, because he will probably fuck up earlier than you will. And so that is your exit liquidity, if that makes sense. So what I always like to tell in the mentorship, there is, for example, there is 100 people that will buy my mentorship out of 1,000 people. All right. Then inside the mentorship, there is only a few percentage that will truly watch all my videos. Then there is only a few percentage of all the people that have watched my videos that will take notes. Then there's only a few people that will truly follow my steps, that will actually study the stuff. Then there's only a few people, and again, the list goes on and on and on and on and on, right? So in the end of the day, you are only left with a very little percentage of people that will actually do the work. And a lot of people will just watch a few videos and don't actually follow the steps or anything. And then, yeah, then complain when they don't make it. And it doesn't make sense, right? Bro, when is the next live stream? If I have any more questions, then I will ask you. Then, since you are extremely smart, I'm not a smart guy. Come on, you're making me shy. But next live stream is maybe during the week, but I don't think so. I don't really have the time this week. But next live stream always on Sunday. So Sunday 8:30 a.m. New York local time is always a live stream. So you're always open to ask whatever you want. What is the best time frame for high probability FVG? The monthly. The higher the time frame, the higher probability the fair value gap or any discount array or premium array. What's your longest losing streak with this trading style? I'm a new follower fan. Welcome to, hey, welcome. Great to have you here. My longest losing streak is, let me check for you actually. What is my longest losing streak? In the past couple of months, what has been my longest losing streak? Two trades is my longest losing streak. Yeah, two. But I believe I've done the math, the math, or at least someone in my mentorship has on my model and my win rate, etc. Combined with my RR, it is, I can, over a period of 100 trades, I can experience a 7 losing streak, I believe. So I just have to keep that in mind, right? But yeah, two is, it's insane. But again, if you follow my steps and create your own model that you're comfortable with, that your logic suits, etc., you can achieve the same thing. No worries. Where was I? I'm a bit lost in the chat. You guys are going crazy. I love it. Absolutely love it. Let me see. SMC can be what is support and resistance can be perceived as equal highs or equal lows. Equal highs, equal lows. Don't try to overcomplicate it, if that makes sense. But these right here are equal lows, for example, and these right here are equal highs. Just relatively close equal highs and equal lows. You're talking about FEG invasion. I have also discovered this. Yeah, nice. Good job, Eve. Let's go. Good stuff. I can see that you study. That's nice. Good stuff. But inversion, yeah. Inversion is sort of the same. It is almost close, yeah. The algo will not change as it's doing. Yeah, exactly. True. And yeah, true, Fabian. We can't change it, right? There's nothing we can do about it. So we just have to live with the consequences. And if let's say there will be an algo change, if it does happen, then it does, again, it's the same theory, then it does need to take out liquidity. So what actually changes? Because it needs liquidity, so yeah, difficult. What's the true market structure shift? Do you consider intermediate term low and intermediate term high when defining market structure shift? For my market structure shift, I look at short-term highs and short-term lows. But for my complete market structure, I incorporate intermediate term highs and intermediate term lows. How to trail your SL? Trail your SL according to order flow, always. So if there's no reason for price to come back to your entry, then trail your SL under the last line of defense. So follow the PD array matrix. How many trades do you take a day? Usually 1. And not every day. So there's not a trade every day for me. But if I trade on a day, usually 1. Unless it's really high probability condition, then I take 2 trades. Then I trade London and New York. But I like to limit the amount of trades I take. You're talking, oh yeah, I got that one. Liquidity will never change because it's a zero-sum game. Someone needs to, yeah, exactly. Yeah, exactly that. You said it perfectly, Elvis. Hi, Aro, very helpful. Keep doing this. Thanks a lot. Hey, thank you for being here, Mahmoud. Thank you. Do you trade crypto as well or just indices? I do trade a little bit. Let's take a look at crypto, actually. Great, you suggested it. Right here, we came into this monthly fair value gap. Again, this is the same story, actually, that we just touched on, right? We have a fair value gap right here. See what we are doing and see what we are doing right here. So what do we want to see if we do want to continue higher off of this fair value gap? We want to see some sign of respect, right? So it ideally shouldn't close inside that fair value gap. But again, that is not set in stone. That's only an early indication. Do you say you lose 7 trades out of 100? That sounds damn for a win rate. Oh, no. 7 trades out of 100. No. No, it's 7 losses in a row. Yeah, exactly. Like Sino said. That would have been pretty sick, right? Why traders analyzing DXY for trading GBP gold when this index claims? Do they actually? Do they analyze a dollar for trading GJ? I don't do that, but gold, that's a good shout actually. Gold, when this index contains 60%. Yeah, it depends also on which CFD you are looking at. So if it's XAU USD, then it is literally compared to the US dollar. So it will obviously do the inverse, if that makes sense. Thanks for the reply. No worries, no worries. So my ideology is market will come there and the algorithm will hatch their inefficiency and then look for new positions as displacement. Hey, that's a great logic, Eve. And I love that you studied your own thing and that you're now creating your own logic and stick to that logic. Absolutely lovely. Can you show the candlestick colors? You can check it out in my Telegram, in link in the description. If you tick on the pinned messages, you will get to my colors. What is a high probability trade for you? Like alpha breaker, block, or fair value gap? A high probability trade for me is when the trade after the 2022 model. So when we have a 2022 model, again, I can't say too much because I owe something to my mentorship, of course. But let me tell you. After a 2022 model, we have a new displacement away. That trade, that new displacement away, that is exactly the one I want to enter on. So if you study 2022 model, a new displacement away from 2022 model, that is exactly where I want to enter on. Coffee, Sama, coffee together. I don't drink coffee actually, but I would love to go for a drink. Always, let's organize in the future a big family meetup. Everyone that has been part of the live streams of our journey, we can grow a lot. I would love to. Yeah, that's like I said in the beginning, right? That's my goal. My goal is to push that new. How can I call this? The new agenda of stopping SOS traders. So stopping people that are constantly hopping from strategy to strategy, from new thing, from best thing to that. I want to help you create your own unique model, create your own unique logic, and then we can actually get to profitability. I have a quick question, Arjo. Yeah, of course, always. You can ask me anything. Don't worry. Don't hesitate to ask me anything. If you allow me, please, if I'm trading gold, which pairs correlation should I use to benefit from SMT divergence explained in videos? Great question. You can use gold. Gold. You can use silver. So that is, what is it again? Is it XAG? I think it's XAG, right? XAG, yeah, XAG USD. You can use that one. Sifa, what's up, brother? How you doing? Welcome back. How are you doing, bro? I'm doing great, by the way. Thank you for asking. If you see it blurry, switch to a laptop, PC, etc. Hey, love to hear it. How many pairs are you looking into a week? If the dollar is clear, if there's a clear direction on the dollar, then these are the pairs I trade, the majors. If there is nothing clear on the dollar, or there is something up with the news events, so it's low probability condition on the dollar for me, then I move to the crosses. I analyze the currency pairs, pair a week with a strong currency, and you get to a pair. Voila. So usually I get to around 6 pairs into the week, but obviously I don't execute 6 pairs. I execute only 1 pair for the day. You're going at a fast rate. Hey, congrats, man. Thank you. I hope you find religion now. Hey, thank you, brother. Thank you, Phantom. It's great to see you here, by the way. I love your questions. What would you need to see on the high time frame before going to a lower time frame? The same thing I want to see on the high time frame as I want to see on the low time frame. How can I say this? I would want to see a discount array or a premium array get respected. So that is I've made a video on how to react instead of predict. It is a pretty old video. It was my previous microphone as well, I believe. And if I have a higher time frame discount or premium array, I would want to see displacement away from that high time frame premium discount array. The way I get to my draw on liquidity is mainly by seeing if we are going higher, where are we going higher from? And then that is order flow. So that creates your order flow. Title is how to react. if you search for REO React, something along the lines of that, it's React. It's a pretty early video. Let me actually find it for you. Let me see. REO React. I don't know where it is. I know, but basically it's saying displacement on the lower time frame. So if we have this fair value gap, this monthly fair value gap, I would want to see a displacement back above the high of the fair value gap. So what happened? And that's the same, right? A lot of people, they have this low, for example, and then they go into the lower time frame right here, but they are shorting or buying below the low. No, you want to wait until we trade back above, so displace back above this low. And then we have obviously signs of buying right here by institutions, central banks, etc., etc. And then we can buy right here, for example. So that is the whole premise behind it. And the whole premise behind it is order flow. I dive very deep into order flow in the mentorship. Let me see. Which country are you in? I'm in the Netherlands. I'm in Amsterdam, my friends. Okay, I think I have like a treatment form for value gap to your PD array. Yeah, if you the 2022 model, displacement away from the 2022 model, and then that entry right there. So it's perfect. Your ideology is perfect, Eve. Can you quick analysis only high time frame to 4-hour Canadian dollar? Canadian dollar, let's see. Canadian dollar. Canadian dollar has been, I tried to avoid it last week because it's stuck. It's stuck between two PD rays. And what you'll see here is you will see seek and destroy conditions because it's stuck. It is stuck at equilibrium of the range. And right there, you will see seek and destroy conditions. There's no liquidity. So here it is creating new liquidity, if that makes sense. So if I had, as ICT always says it, if I had a gun to my head and I would need to call the drawn liquidity, I would say we are, that's a difficult one. I would say we are moving lower because we are still on the monthly, still coming off this fair value gap. We are not displacing away, but I would say we are at least heading to the previous month low and then maybe previous month high, but it's difficult. I wouldn't trade this pair. Absolutely not. And on the 4-hour, yeah, like I said, it's in a consolidation right here. It is a very difficult price action right here. So I wouldn't trade this, to be honest. Let me see, where was I? Are we doing a short weekly review here for DXY? Yeah, let's do it. Let's do it actually. So dollar, these were the pairs I was looking at last week actually. Dollar, I find dollar currently difficult, but again, I want to see what Monday does. So I want to see what is Monday doing. When Monday closes, then we have a better indication because like I said, on last week, we had Monday close and is hovering below, or sorry, it's hovering above the discount array. So when we then sting into the discount array on a Tuesday, then we can have a great indication of what the rest of the week wants to do. So if you do find it difficult on whatever price is currently doing, then just trade Wednesday, Thursday, and Friday. Because then likely the trend has already set into the market for the week, if that makes sense. But I don't want to call the top right here. I do think we are still heading a little bit higher on the dollar. And the volatility is coming into the market on Tuesday, Wednesday, and Thursday. So pay attention to those days. And watch out for FOMC on Wednesday. Don't get caught up in the craziness if it does want to happen. Then for ES, this is looking pretty clean. But again, the ES has been absolutely insanely decoupled of the dollar. Same for Nasdaq and the Dow. They have been go all over the place. They have been very weird price action. But if I was to look at the ES right here, I would expect a sting into this daily fair value gap overlapping with this breaker and then a continuation higher. So Monday, again, Monday could be a consolidation. Then Tuesday, maybe sting into the daily fair value gap. Depends on which day we sting into the daily fair value gap. That is the day I would want to trade on ES. Let me see. I think it's the reading willing. Yeah, that's the one. Tori said the right one. Tori knows his stuff. You know your stuff. Thank you. Are good work. Hey, thank you, Foster. Thank you. You can see Phantom in the house. King of Judas. All right. The Netherlands is /R the most beautiful country. I'm not sure. But maybe it's because I'm living here and the grass is always greener on the other side, right? It's a shiny object syndrome. Turtle soup to turtle soup. Lovely. Will you keep this live? Yes, this will just be uploaded. It's uploaded under the live section on my YouTube page. So it's a bit iffy, but it's all right. Yeah, big consolidation. Hey, what's up? Trying to become someone. How are you doing? You're my favorite trading. Thank you. I appreciate it a lot. I see you all the time. I appreciate the support a lot. Thank you for being here. Nice. Good shit, Carlos. Good shit. Agreed. Bro, your video on psychology on how to be great, that really helps a lot. Hey, love to hear it, Eve. Thank you. How long can you pass the challenge since you're using a high time from entry? Depends. In this week, I could have passed the challenge, but sometimes you go a long time without an entry, but that's okay. But if you actually use a higher time frame entry, as in you are using only high time frame entries, so 4 hour entries, then it will obviously take a bit longer. It will, if you're just trading 4 hour, for example, you might only get one great setup a month. And that's just what you have to deal with then. And it's unfortunate, but again, it is what it is. If you don't have the time, then it's perfectly fine. And you have to remember, right? One setup a month might not seem like a lot, but hedge funds, etc., they don't trade a lot. They are, and again, not saying that we are hedge funds, but hedge funds only typically make, if you're making 40% in a year, you are outperforming almost all hedge funds. And that's absolutely insane. That is absolutely insane. 40% in a year is very doable for us. Can you show your trades from this week while you take? I will show you the trades that I took, the midweek price action review that I posted on Wednesday. You can take a look at that one, and that's where I go over all the trades, I believe. And then I took another trade on Thursday. So the Thursday, or I think I said on Wednesday, I said this day 4 hour per value gap on EU is the one I like the most. It's overlapping with this mitigation block. So if it does want to continue lower, I want to see lower price here. Then I woke up in London, and this was obviously right here, the short-term drawn liquidity. And what was it? This was my trade right here. And I entered a little bit higher. This was my trade right there. And that was me done for the week. That was me. What do you use for trading futures? I did trade CFDs, but for TradingView, on TradingView, I just use the CME ES. So that's just the CME package, the data package. And for futures, I just, I'm with IC Markets, so it's all CFDs. It is not actually futures, but it's CFDs, so IC Markets. Beautiful review, are you? Thanks, same. Nice. Premium rate next week, FMC, Volta. Yeah, stay safe for sure. You too, Elvis. Thank you for being here, brother. How can I expect that it's continuation or reversal in New York kill zone? Ooh, great question. That is all dependent on your higher time frame. That is a great question, Rohin. That's a great question. That is all dependent on your high time frame discount and premium rates. So if you, let's take a look. Let's take a look right here on GU. Where was it? We had this daily fair value gap, right? I'm on the 4 hour. This daily fair value gap. Then how can we know if London will be continuation or if New York will come into here and a reversal. Now, I already said it, right? If London comes into here, then London will likely, and London displaces lower, then London will likely be the high of the day. If London hasn't reached into this premium array on the daily, then New York, if New York wants to reach into it and displace lower, then New York will be a reversal. And as you can see right here, London already displaced lower. So New York will likely only be a retracement of what London created. And that happens a lot of time if London has a fair value gap in the leg. London, small fair value gap, this is, I think, New York already. But right here, we have fair value gap in the leg, so will likely only be a retracement. That makes sense. Do you use the silver bullet concept? Yes. Yeah, I do, but not... I don't mark everything up, if that makes sense. A silver bullet is, for example, the trade on EU I took. That was a silver bullet entry. Right here. It's very close to the drawn liquidity. Price will not waste a lot of time to get there. What's your pass rate percentage on challenges? I don't take challenges. I will probably take a challenge soon. So if there's any prop firms listening, I will probably take a prop firm challenge soon. But I trade for, I'm a private equity trader, so I trade for investors. So I don't, I'm not interested in prop firms, if that makes sense. Which prop firm? Yeah, I don't trade prop firms. I currently only trade with investors' money. So all my money is coming from the investors, if that makes sense. But the ES is different chart with different moves, right? Yeah, ES is a little bit different from CFDs, but again, CFDs, the chart, the candles are pretty similar. So if you just look at the candles and trade off your analysis on the futures on ES, and then just don't look at the price, because the price will be different. But if you just look at the candles, it will be almost the same, if that makes sense. How long have you been trading ICT, bro? I've been trading ever since I got into trading. I have always been around ICT. I've always been familiar with kill zones, etc. I would say, what is it? Almost a year ago, I've been fully indulged into ICT, so only ICT. And before that, I used to watch others that are sort of similar to ICT as well. But ever since I got into trading, so around 3 years ago, I've also watched ICT at that time. So it's been a long time. I've seen ICT Silver Bullet. If you have any idea, can you explain? I haven't seen it, actually. I don't really watch any ICT content anymore. Have a look on Gold chart, please. Yes, let's go. Let's go. Let's do it. Let's take a look. Let's see. Let's see. This is pretty clean, right, currently? Because we have this fair value gap right here. And we have this breaker right there. So we could maybe see a sting into this fair value gap and then a continuation lower. That would be very clean. That would be very clean. So that's the first that my eye pops to. And target would be this weekly fair value gap right there. And even the high of this order block. Boom, right there. That would be a target. Let me take a look at the monthly. Yeah, monthly order block as well. So that would be the target. So I would watch this daily fair value gap overlapping with this daily breaker. And on the 4 hour, yeah, again, this daily fair value gap, it depends on what Monday does also. So keep an eye on Monday. You are a 6-figure trader. Yes. Yes, yes, yes. Let me see. What is up? What is up? Yeah, all right. Do you do one-on-one mentorship? The masterclass is the closest to one-on-one you will get. That makes sense. So the masterclass is with the Discord, etc., where you can ask me anything, where we can hop on calls, etc. But fully one-on-one, currently no. It is like fully, yeah. It depends on what you mean, on what your definition of one-on-one is. Thanks for explanation. Your notes give me the strength. Hey, No worries, brother. Happy to have here. USD JPY. Let's take a look. Yeah, USD JPY. Let's take a look. We are coming into this monthly SIBI that we also outlined last week. So right here, this is an interesting area. And right here, I would dive into the 4 hour and I would see if we do get some sort of rejection. So if we do want to continue lower, we might take out the previous week high. So see a sweep of previous week high and then something along the lines of this, which creates a breaker, right? So then on the daily, if we do want to continue higher, we will likely continue higher off of this order block with this fair value gap. So we could see maybe, and this is all me speculating, right? But we have to react what price does first, etc. So if price just continues higher right here, and then we get some sort of breaker, then we can target this. But if this happens first, then we can potentially target the previous week high, and then we could see lower prices. So we have to react. So that will be interesting. This daily fair value gap, daily order block, and the previous week high. That is something I will be looking at. Please explain about the 3-drive pattern. The 3-drive pattern is very basic, right? It is if we come into some sort of higher time frame premium or discount rate, or any premium or discount rate, we will usually see some trendline liquidity form, and we have 1, 2, 3 drives, and on that third drive, we break down heavily, and then this becomes your breaker, etc. And that could be your trade. So it's basically how we deliver into a PD ray. So right here we have 1, 2, 3. It's 3 legs up before we take it out. How long do you expect to do these live streams for? I hope you do not stop. I won't stop anytime soon. Don't worry. I won't stop anytime soon. I do hope to do them more often, or maybe during the day, but I currently don't really have the time. So it is what it is. But every Sunday, at least for the foreseeable future. How old are you? I'm currently 21 years old. Actually, do you use flout ADR and CBDR in your narrative? If yes, please explain. I don't actually use that, but I do. If it's a consolidation, of course, it will be seeable on your chart, and that consolidation is not really relevant for me, whether it's flout, CBDR, or Asia range, etc. And then for the standard deviations, I don't really use it. I don't really like to use the standard deviations. I just like to see what the chart is telling me. So where the fair value gaps are that I can target, or the order blocks, etc. Definition of low resistance liquidity arm. Yeah, exactly. So that right there, if you, this to the bottom would be a low resistance liquidity run, right? That to the bottom, and to the highs, it would be a high resistance liquidity run. So yeah, great spot. Good shit. And how to choose a reasonable buy/sell side liquidity target. So what you could do is, if you are struggling a bit with that, what you could do, if we see some sort of breaker right here, right? We get some sort of market structure shift higher, draw your Fibonacci on the most recent range, and then target everything that is in the discount. What is in discount right here? This fair value gap and this order block. So you could target that, and that is fractal on everything. So that is something you could use. So for example, if we had this leg right here, and we had market structure shift, and this fair value gap is something we want to be involved in. All right, what can we reasonably target inside this discount? Well, we have this swing low. What is the swing low? That is a liquidity. So right here, this is what we could target. Maybe fill in the fair value gap. This would be the first target. So again, what I use as target is, but that's because I have, of course, with experience, you will see your targets very clear. So I just zoom out a little bit, and then I think, all right, what would be a very clear target right here? Well, we have this fair value gap and we have liquidity right here. So if we were to continue lower, then first target would be this fair value gap, maybe reach it here. Next target would be all these lows right there. And then some sort of, oh, beautiful price action on this line. then something beneath those lows that has to be rebalanced. So if we take a look at the weekly, for example, right here we have a weekly fair value gap sitting below what? Liquidity. So this could be a target right here. 26-year-old six-figure PE trader. PE trader. That's quite. Yeah, it is what it is. Thank you, Fabian. I appreciate it. It's. I'm blessed for sure. I'm blessed for sure. But there are people. There are people doing better. There are people doing worse, of course. I'm blessed. I can't complain for sure. Where are you from? I'm from Amsterdam, from the Netherlands. If you could start any business soon with the amount of capital you would already have, what would you choose? I had something in my mind, but there's obviously something. There is. I'll tell you a funny story. And this is why I don't like to share a lot of things as well. I usually shared a lot of stuff, and it always came to backstab me. And that's also because of some things I like to believe in a religious wise, etc. But there is a funny thing. I was in a community a few years ago, and I had this business plan. And it involved in a tool for your trading. And this person, and he's pretty known inside the industry, and this person is known inside the industry, and he stole that business plan off of me. And he didn't even let me know. He didn't thank me, anything. And he made a shit ton of money off of it. So it's all right. I'm not too bothered about it, but it's a funny story. It's a funny story. But I would say something in the educational space is fun. But something that's my current aim, right? So something in the educational space, but not just educational space, because I want to truly grow traders into private equity traders as well. So I want to, my masterclass mainly is for eventually, and this is a year's project, right? This is a long project. I want to match them with investors. So if you are in my masterclass, I want to pair you with an investor already, if you are ready for it. And that's something I have for the long term. That would be absolutely insane, right? Because I don't think there's a lot of course, we have prop firms, etc., but there's not a community out there that will pair you with an investor. And that's where I want to be. I want to, if I see the potential in you and you follow my steps, etc., and we truly have a connection, that I want to pair you with investors. That would be awesome. What it is, legs is just, for example, this is a leg, right? These two candles, it is just a leg up. So this is all a leg up. It's a bit subjective, but that's just a leg up. Thanks so much. No worries. Thank you. My problem about trading was I can anticipate the market and get right, but I'm struggling about taking the action. Why is this happening and how to overcome this? This is a great question. That's very relatable, right? We have all been great analysts, I think. And that's what we touch on in the mentorship a lot. And I tell people a lot of times, you can be a great analyst, but it is very different from being a trader. And usually you will first be a great analyst, and then you will actually become a great trader. And so first analyst, and then execution comes. So that is actually by doing, but also a lot of times why people struggle with the execution, because they don't have a set of rules on how to get involved, if that makes sense. So you need to have a protocol. If this happens on the higher time frame, I will do this on the lower time frame, 2022 model, for example, and then I get involved. And that way you have something set in stone almost for 90%. And then you have a set of rules that helps you to get involved, and you will not get confused. And the only thing you have to do is then conquer your psychology and actually get in, and actually start doing it. But obviously with time experience, don't worry, brother. We have all been there. Don't worry. That is absolutely a normal, I wouldn't even see it as an issue or problem. It's an obstacle we all have to get over. And don't worry, you will get over it. Same here with not being able to get in. Yeah, exactly. It's a huge problem, but it's again, like I said, it's not really a problem. It's an obstacle we all have to get over. And getting over it is first having those set of rules, once you have the set of rules at the beginning, it will be very uncomfortable to actually execute, because you will see, all right, maybe I'm not doing it right, but you just have to start doing it. And it's the same thing with whenever I'm trading a new account, I always lose probably the first couple of trades. Why? Whether it's a challenge or whatever, I probably lose the first couple of trades because I have to first sort of stumble and then fall on my face and then pick myself up and get the momentum going. And then I'm more comfortable, etc. If that makes sense. Hope that helps, by the way, but losing is part of trading and reduce your lot size. Yeah, exactly. True. Great advice, Elvis. Thank you. Damn, bro, I feel bad for you. No worries, brother. Shit happens. It's a learning experience, right? It's a learning experience. I had to learn it the hard way. Hi, bro. How can we identify which stocks are in a consolidation phase? Is there any screener available to select the stocks? Ooh, I don't actually trade stocks, but let's take a look at some Apple. The way you can see a consolidation is, of course, by very visualize it. This is a consolidation. So usually when we are stuck between two PD arrays and we are just creating momentum or creating new liquidity, but obviously right here we have an order block with an overlapping gap, fair value gap, and that is why we have a consolidation, right? A sweep of the consolidation lows, and then we continue in a trend. So what you'll see a lot of the times is whenever there's a consolidation, whatever the trend was before this consolidation happened, it will likely continue. So sweep of the lows, that's where a lot of people get tricked in. And then something along the lines of this will likely happen. So whatever this trend was, if this trend was like this, then it will likely do the opposite, like this. But if the trend was like this beforehand, it will likely do something like this. Let me see. What do you think about Eva Vlaardingerbroek? I have no idea actually who that is, brother. No idea. Not her. Maybe I recognize the face or something, but I don't know. That's what Darwin next. Oh shit, that's cool. It's cool. Let me check that out actually. Let me write it down. Thank you. Yeah, it's a really cool concept. Oh yeah, I see now. Oh, sick. Nice. Could you check? Yeah, for sure. Let's go over to 5. Let's see. Which one do you use more normally? Skilling or Blackpool? I'll just go with Blackpool, I think. Did I click on Blackpool? Oh, I don't like this. And I'll tell you the reason why I normally don't like this. Whenever I zoom out and there's no price action to the left or anything, and right here we have just an expansion higher, then I always feel like if I now want to get involved, I'm either chasing price or I'm calling a top. And both of those conditions are low probability condition in my eyes. So that's a very difficult situation. So right here, of course, if we do want to continue higher, then this fair value gap could be something. If we want to continue lower, we have just swept into, is this new all-time highs? I believe it is. Or if this is, this is only from 2020. So it's probably not new all-time highs, but we have just swept these highs. So if we do get some sort of market structure shift to the downside and start to respect premium rates, then that could be interesting, right? But it's difficult. So if we do want to continue higher, this daily fair value gap. If we do want to continue lower, wait for market structure shift. But right now, if you're trying to get involved either in here, so not waiting for a high time frame discount rate or premium rate, you're either calling the top or chasing price. I'm 16 right now. Can I become profitable within 6 months around? Been doing it for sure. For sure. Then you're trading around 10 months for sure. For sure. 100%. If you get to a stage where you find the model you like and you find the logic you like, etc., find analysis routine that you like and you prefer, that you absolutely can stick to that and just focus on getting your psychology together and your risk management, and you will absolutely come very far. At least you will be very, very far. And for someone that's 15, that's insane that you are already busy with trading, etc. That's absolutely insane. Absolutely. So you can already be proud of that, brother. Already. Do you trade if London doesn't sweep Asia liquidity? How to identify which dates should not sweep Asia liquidity and which should not? That's a great question as well. And that leads me back to this example that we had on EU, I believe, and GU as well. But right here, we have Asia, right? And we had a daily fair value gap. What you'll see a lot of the times, and this is the same for London, high of the day, low of the day, or New York open, reversal, a continuation. How can we actually spot that? Which one of those sessions comes into that daily fair value gap, or whatever fair value gap, or whatever discount or premium rate, and displaces away already, and then it will likely only be a retracement. So London, if this is Asia and Asia displaces lower, then London will likely only be a retracement of whatever Asia created. So if we take the example right here of AU, and we had this daily fair value gap right here, we had Asia session already displaced lower. So London will likely only be a retracement of whatever Asia created. See you later, Phantom. Have a nice day, brother. I'll see you next week. Keep me updated. Keep me updated for sure. So if that makes sense, right here, Asia already displaced. So London will likely only be a retracement of whatever Asia has done. Let me see. Where do PE investors know you from? It was very coincidental. I was talking with someone and they just were like, well, I'm willing to invest. So I was like, all right, perfect. It's very coincidental. It's whatever the universe provided for me. It's actually crazy how coincidental it was. I was just talking with someone, actually someone I knew as well. So very coincidental. Gold. I went over gold just earlier, but I'll show you what we went over. Right here, we had the daily fair value gap overlapping with this breaker, targeting this weekly fair value gap. So that's interesting. Phantom, don't rush. Yeah, exactly. 15. That's insane, bro. 15. Absolutely. Don't rush it. No need to rush it. Take all the time you need. And it will probably, you need to submit to time. And it will probably take you longer than you expect it to be. That's just the very basics of anything that you want to reach. It will probably take you longer than you expect it to be. And it is what it is. Nothing wrong with it. Especially, yeah, exactly. Exactly, Carlos. Elvis, yeah, true. Consolidation is AMD for sure. Fact. Can you explain to us details about valid fair value gap and CE so we can benefit from you? I have a A to Z guide video Tuesday on fair value gaps. So a valid fair value gap, etc. Once price reaches our POI, what area of confluence do you look for? I look for market structure shift. Not necessarily market structure shift because we have a very specific way of looking at price action inside the mentorship, but fair value gaps. That is what I want to see. I want to see fair value gaps on both sides actually. And then we can maybe see a market structure shift. And then after we have the 2022 model, I want to see a new displacement from the 2022 model. And then we can get involved. So if you can write that down, those steps, then you basically get to my model. Can you explain SL for turtle soup? Yeah, for sure. For sure, my brother. So right here, if we came into this daily fair value gap, right? And we want to place our stop loss, then we might see on the 15-minute, what is below that daily fair value gap? We have some sort of equal highs. All right, but they are not really relevant, right? Because this could have been our entry, but our entry is based off of the daily fair value gap. So what you could do, place, again, that's why turtle soups, they are fancy, but if you wait a little bit longer, you will have a way better entry than a turtle soup entry, because your stop loss, you're basically calling the top right here. So your stop loss needs to be taken into account for that. So right here, if you're trading off of this daily fair value gap, and again, could be any fair value gap, even a 1 hour fair value gap, but then you place it above the fair value gap high and targeting the low. So obviously still a 3R, that's perfectly fine. It will take longer, obviously, because you're basically then entering off of the daily. If you don't mind, can you show one more example of there's no Asia sweep and your narrative behind it? Yeah, for sure. For sure. I'll take this example again. But right here, And again, you can, it's simple steps. So you already have a higher time frame drawn liquidity. The drawn liquidity on the high time frame was this low. So whatever session trades into this daily fair value gap that I was expecting lower prices off of, so that your higher time frame done. Higher time frame analysis is done. Execution is what we're seeing now. Execution is when we come into this daily fair value gap. Asia already displays lower. So when Asia already displays lower, then, and displays, what is the definition of displacement? That is fair value gap. So fair value gap right here. London will likely, and this is where London starts, London will likely be only a retracement and will not take out Asia high, because that's also very unreasonable, right? We can't expect London to come all the way back above here and then continue lower. Now, obviously it could happen, but what is, if we are going lower, where are we likely going lower from? Well, we have order block here, fair value gap already in this leg, we have this swing high, then that is very unreasonable for us to expect price to come all the way back over here and then continue lower. You can study it. You can study it a little bit and it will make sense. So whenever Asia takes off and London is in retracement, then study why that happened. Usually because we're already displacing away from some sort of premium or discount rate. How much time do you spend behind charts? Not a lot actually. Usually in the evening a little bit. Obviously during the live streams I tend to look at it, but I tend to minimize it as much as possible, because the more I look at a chart, the more depressed I sort of get. And I don't mean to disrespect anyone with a depression or anything, but the more I feel very down. I feel very down when I look at the chart a lot. I don't know what it is, but I just feel like, oh, I could have gotten involved. I could have done this. I could have done this. And I just, when I have my chart open the whole day, I feel so shit at the end of the day. So usually how much time? Usually I would say around 2 hours that I actually look at the chart for a day, around 2 hours. And of course, if I'm studying something in the evening, then it's a different story. Then I might spend a little bit more time. How much time taking you to become profitable after completing the ICT concept 22? After completing the 2022 model, and it didn't actually take me too long. I would say after watching those, after 2022 model, I already saw a little bit of success, but I wanted to dive a little bit deeper into it. So I watched the core content, and during the core content, it just started clicking. So that's why. I joined the basic mentorship from it started, and I'm currently down 2.67%. How do I overcome psychology to use the model nice enough to get out of the drawdown? Well, first off, reduce your risk. So reduce whatever you were risking before, reduce that. And then you can, inside the mentorship, we also talk about psychology. Again, I can't tell too much, but you will know it because you're in it. And inside that, you will have certain topics about psychology, and you can use that. Spilling usually, thank you. Bro can talk about Q1, Q2, Q2, 4 hour OL. I'll say, yeah. It's just basically same thing, right? Whatever time frame you are looking at. So even on the 15-minute, there's a power of 3 right here, because we open, we have a little wick on the downside, we reach something, and then we have a wick, and that's just same thing that happens constantly. Trap longs would have the opportunity to get out. So yeah, exactly. Which time frame do you prefer to confirm display? 15-minute or 5-minute? Both. Depends on which time frame the PDA is. Which time frame the PDA is. I think more people should like and share your videos, so more people get the benefits of your videos and show their videos. And no worries, it is what it is. I'm very happy with the family that we are creating here already. So very blessed. And again, we don't need 1 million people to follow me. That's not. I would rather have a small family with a lot of dedicated people instead of having 1 million just random people like that don't really care for you, etc. That just say some stupid stuff. So yeah, it's all right. No worries. I love it though. I love it. SK. Love your feedback. Raptor, any tips on psychology? Yes, there is some tweets about it. There's some tweets where I tell you it's very difficult because I don't want to spoil it for my mentorship, but you need to find a pattern because everything works in patterns. Psychology works in patterns, just as in when you are looking for a breaker, what are you doing? You're looking for a pattern. Whenever there's a pattern in your psychology forming, you need to break the momentum and you need to have some sort of sentence that you tell yourself that everything will be okay, or do something to break that momentum. It might sound a bit vague right now, but if you study it, etc., it will make a lot of sense. What do you think about breakaway gap? Yeah, it's a great concept, but again, it's a bit over glorified, as in it sounds like magic, but it's just a very simple step-by-step process. If you search for IO on YouTube and then breakaway gap, you will find a video on my breakaway gap video thing. Yeah. What strategy do you advise novice should target? Wait, the more confirmation you have, the better. So don't start with the 2010-2 model, but wait for more confirmation. So maybe a silver bullet, and you can watch my market maker model video, and that's about silver bullet as well. What's important to see when you have to find lower time from entry, fair value gaps, to the place where my drawn liquidity is. If my drawn liquidity is on the bearish side, I want to have bearish fair value gaps. That is the most important, and bullish fair value gaps going into my PD array. Is it better to wait a lower time frame FU rate after FU rates? I don't trade FU rates, but it always sometimes lower time frame turtle soups are not relevant because you already see what a higher time frame is doing, if that makes sense. I know you're excited to get this in. For sure. I'm very excited. New content, and not necessarily new as in completely changed, but way better content, way better steps. I'm very excited to get it started. Which time frame do you use to confirm market structure shift and entry? Depends on which PD array we are coming off of daily. PD array will be a different confirmation entry than a 4-hour PD array. So if the PD array on 15 minutes, you will prefer 15 minutes. And if it's on 1 hour, you will prefer not necessarily. If on the higher time frame, let's say we have a monthly PD array, then I want to have a 4-hour displacement. What is your morning checklist before taking a trade? I believe I have in my journal. So if you go to my link in the description right here, there's a link with the zap.bio, my socials thing. There should be a helping hand all the way at the bottom with a journal. I think that is my checklist in there, if I'm not mistaken. Or just, so for example, price went into daily for value gap. We have a bearish bias so that high entered daily is lowered. It's even lower than the rotation. Exactly, perfect. Exactly, perfectly said. Literally perfectly said. Yeah, if you combine, and Elvis, I think you understand, right? If you combine everything together, then you get to, then it makes more sense, if that makes sense, because we talked about intermediate term high, etc., and the fair value gap in the leg, and then everything combined makes a lot of sense, in my opinion. And I think you understand it as well. Where does ICT explain institutional order flow entry drill? I think it might be in one of his I have to be careful with what I say before ICT sues me, but I think it might be in one of his older premium mentorship stuff that's leaked, but I don't know where it's leaked. It might start with Telegram, but you have to do the study on your own. But institutional order flow entry drill is nothing. It's not really fancy. This is an institutional order flow entry drill, where it's just a spike into a fair value gap, and it's usually institutional order flow entry drill is usually a very small spike. So this is your institutional order flow entry drill, for example. This is a small little spike into fair value gap. You have to understand ICT and basically the whole scene and how the whole world works. They're all fancy words that don't actually mean anything. Thanks for it. No worries, Vadim. No worries. Great to see you here. First time here. Do you have a video what you look in clean chart If not, can you show analysis on clean chart? Thanks. Yes, I do go over it in the A to Z guide. I will not go over it into now, but there is a video you can check out. Last week we had a weekly forecast, so that's a live stream as well. There I go over a clean chart basically. All right, so I want to thank everyone. Thank you for being here. I'm going to end it here. We had a lovely conversation. We've been going for a while. Oh, yeah. But it was lovely. And I will, please, everyone, remember the homework. Study fair value gaps. Study fair value gaps. Study how they form a narrative. Do the studying. And then you will find patterns and you will be absolutely mind blown because you will create your own logic and your own edge. Very important. Please do this. All right. Then next week, obviously, we will have a new live stream on Sunday. Keep me updated. Keep me updated on socials. You can message me at anything. Again, my DMs are a little bit flooded, so I'm sorry if I haven't responded yet. But I'm trying to do my best, and that's why I do these live streams so everyone can ask me anything. And that's it. All right. So thank you, everyone. Thank you, Elvis. Thank you, Carlos. Thank you, Alistair. Thank you, Wolf. Thank you, Kilo. Thank you, Hope. Thank you, Stephen. Thank you, everyone. And I'll see you at the next one. Perfect. Thank you. Thank you, Fajar. Thank you, Sergi. 21. Yes, 21. Yes. Thank you. Thank you, Sifa.